Okay, on today's show, 3 questions. Number 1, what does a Bitcoin Spot ETF even mean? Should you be following general rules of thumb? And what is the true cost of childcare? Welcome to 2 Cents, where we help dentists navigate all the noise. I'm Matt.
I'm Taylor.
And I'm Rabih.
Taylor, I need more energy out of you, man. That was
Sorry.
so... I'm
I'm so worried about the sound now that I'm like whispering into my mic because we had so many mic
I
issues.
feel like since we changed over to this new software, which is amazing, we love it, but we've been so much more insecure about all the things happening, going live and the tech and all the stuff. Like before, it was just like, let's just go. It's okay. You sound great. You look great. You sound great.
Just make sure that you're not hearing me click on my
Nope.
We're good.
You sound great.
Self-conscious now.
So, okay. Rabih, let's just jump in. What does a Bitcoin Spot ETF even mean? I've been hearing this. We've been getting some questions. We've been seeing some things on Facebook. Let's break down what does that even mean?
Yeah, I don't know if you guys have been like checking, I'll call them low quality financial content. Those like rush to buy Bitcoin now, etc. That time of world. Earlier this week, the SEC has finally approved a spot Bitcoin ETF, which allows investment management firms to create those ETFs that we know of, but for the first time, they're going to actually hold the coin itself, the digital coin itself. But you asked me
the actual currency.
Exactly. But you tell me, well, I was able to trade Bitcoin for the last 3 years from my Coinbase account or other ETFs out there. What do you mean now the SEC just issued that ETF? There's a difference. Previously, what you held in your ETF to track the price of Bitcoin were actually futures, which is a contract where 2 parties bet on what the price of Bitcoin is going to be a month from now, 3 months from now, etc., which is different than the actual price of the currency at this moment in time. So in a sense, your risk exposure is your other party, the counterparty in that future contract with you, not paying you the agreed price of the Bitcoin. Whereas now your risk exposure is the actual price fluctuation of the currency. And that is something completely different. It's considered a different asset class by itself. If I want to give you an analogy to other asset classes that we've talked about on this podcast where this is related to, it's very similar to when we said you can't buy commodities themselves. Most of the time when you are buying commodity ETFs, you are going into a future contract on the price of that commodity, and it's a different risk exposure. So earlier this week, the SEC approved the existence of spot, which means spot literally means the actual currency. Futures means, a futures contract, a spot Bitcoin ETF. And given that this has been, in the market for so long, companies already built their infrastructure, already made up their products. 11 Bitcoin ETFs went live in the first day of trading yesterday.
Weird.
11. And it's fascinating what the market movement is. I don't know if you guys can see the picture I posted of that graph. So Bitcoin yesterday, when the first day of trading happened, went down 4%. Out of all the other ETFs, the one that made most money went down minus 2.5%, where the one that lost most money went down 6.7%, where Bitcoin actually went down 4%, which tells you something, that those ETFs up to this moment do not really track the price of Bitcoin, which is what we want to talk about today. And, a spot Bitcoin ETF is a little bit more than just, I'm buying the currency. An ETF structure, and this applies to equities, to fixed income, any ETF structure, is a little bit different. And there are multiple risks on top of the price fluctuation. The first one of them, and what represents the data yesterday, this huge variance from the actual price of Bitcoin over one day, is something called tracking error. So what they ended up doing, the way those ETFs are created, investors like us three want to go and buy the Bitcoin ETF. We reach out to the market, we place an order to buy. What then happens is that an authorized participant has to go collect the Bitcoins and exchange them to actual shares of that ETF. And the fact that it is the first day of trading, around $4 billion of money just in Bitcoin fluctuated yesterday in the market, made it so hard to actually do that creation or redemption process where ETF shares are created out of ETF currencies, that most of these ETFs really drifted away from what the price should be. So I would think of it as like the first couple of minutes of a storm, given that we're having these in Utah lately. Like the snow is flowing everywhere and you can't really understand how many inches is going to flow because it's still in like the middle of the action. You have to give it a couple of days until, you know, those authorized participants get their act together and they can actually redeem and create shares of that ETF without really fluctuating away from the price of that currency.
So you
that
see
was
this,
number one.
you see this smoothing out over a period of time.
Yeah, definitely. But this is a risk, especially for people who want to jump on the boat the second the ETF is now on the market. Like I'm interested in an ETF, a Bitcoin ETF, because it's going to be much cheaper than the futures. We'll talk about that in a second. But do I want to do it right now where there is a lot of inefficiencies and deviation from the actual price of the Bitcoin? I can wait a week and that risk will disappear almost entirely just because the market dynamics become more efficient. The second point that we need to talk about from the transition from futures to spot ETFs is actually the cost structure. When you are buying the coin, you're just buying the coin. You don't have to worry about it. Whereas when you are buying futures, and given that futures have an expiration date, so you're buying a future ETF where in that ETF, it's holding futures that mature in 30 days from now or 60 days from now. Once that time period ends, they have to roll. They have to roll into new future contracts. And that act of rolling from one expiration to the next expiration actually has a cost component in it. And this is why people are excited about the spot ETF, because now we got rid of that future inherent cost. It's calling the rolling cost. And now you can just be in a spot and avoid that. However, what does this mean to a person who's just going into a spot Bitcoin ETF? It means they have to compete on buying those ETFs against all those other pre-existing Bitcoin holders in the form of a futures ETF that now decide to sell out to go into the spot. So if you are someone who's just coming into the market for the first time trying to buy a spot Bitcoin ETF, you'll just see it that it's dropping down. But from the perspective of someone who already had Bitcoin future ETFs in their account, now it's cheaper if they hold the spot Bitcoin ETFs. So what they're going to end up doing is that they're going to sell the futures and go into the spot. This mechanism by itself is what's pushing Bitcoin down. It went down 4% yesterday. Up till now, we're still early in the trading day. It's down 5%. Bitcoin is down 9% over the last less than 48 hours, simply because of how money is moving. And this is another risk of spot Bitcoin ETFs that will disappear with time as the market become more efficient, but something that we should be looking into.
So again, sounds like just more of a structural, because of the structural shift of ownership in the actual asset, it's creating this, as you put it, this snowstorm that will settle down. It sounds like. I would imagine that most people moving forward owning Bitcoin will be done via a spot ETF now that they've been, and like to your point, it's a lot of just shifting from the futures market into the spot price, basically.
Exactly.
Right?
Exactly.
Curious, and maybe this is not something we know, but you said there's 11 funds that were already that were obviously just ready to hit the go button when the SEC gave the final approval. So did those funds already own Bitcoin, or did they have to go out and buy it that day?
They have to go out and buy. Here's the interesting thing. Out of all 11 funds, only one fund, which is the Grayscale Trust, is already actually owned Bitcoin. That was one of the very few Bitcoin. It wasn't an ETF. It was a public trust, which is a very different and complex product structure. But think of it as a trust where everyone can go in. And it charged like 1.5% expense ratio. And it had around $28 billion in it. And this is the only exception, the Grayscale Trust. is the only exception out of the 11 where they just transformed the structure from a public trust to an ETF. So they kept their investors in them, and they changed the just the legal structure of the packaging. However, all the other 10, they just started trading and they are out there to buy Bitcoin. That's why Bitcoin, like over the last couple of weeks, because there was an SEC Twitter account hack a couple of months ago where they kind of showed that, yes, it is on the table that a spot ETF is in the works. And this just drove momentum into how, the price of Bitcoin is going up. And then, day traders' words or like terminology, now we're seeing that they are selling the news, right? Like this is what's happening. It went up. It's too late. It already went up. And now they're just kind of selling the news. So out of the 11, only one transferred the shares from a trust and into an ETF. And what's interesting is that the expense ratio on that ETF is still 1.5%, whereas all the other ETFs, all the other 10 that just were created, actually have really slow expense ratios. Some of them, like ARK and Bitwise, are offering a 6-month period where they're not going to charge you any expense ratio.
They're just trying to gather as many assets as they can.
Exactly, because they're all trying to go and lock in investors. We know money is sticky. And this is exactly what Grayscale is doing. They are leaving their Bitcoin ETF expense ratio at 1.5% because they know they have so many clients already in with a lot of long-term capital gains that if they decide to leave to a cheaper ETF, they have to pay the taxes, and that's not really in their favor.
Yeah.
However,
you're stuck.
You are stuck, but this does not mean that you can go long one ETF and short another ETF to neutralize your exposure without paying taxes. So we'll see how that pans out in the next couple of days. So with that, I summarize all the 3 major considerations with spot Bitcoin ETFs that we should be aware of. 1 is the tracking error and, being at the heart of the storm for now. 2 is the rolling return out of futures and why this would give people a tendency to move out of their future ETFs to the spot ETFs, and that would put a selling pressure. And 3, the expense ratios, where given that they are all going to just track the price of Bitcoin, try to search for a Bitcoin ETF that actually has the lowest expense ratio out of the 3.
So Taylor, now that this spot ETF has been released, or 11 of them, it's clearly you're going to put all your money into
that's
Bitcoin.
exactly what I'm going to go to.
Make sure you're diversifying. Make sure you're diversifying across all 11. That's how you diversify. Just make sure you're spreading it nice.
You're being sarcastic, right?
Clearly. Okay, so nothing changes from our standpoint. I mean, we think this is good news for people that are interested in Bitcoin, right, Rabih? We're saying this is good news as far as long-term, the access and ease of being able to invest in Bitcoin. From our standpoint, nothing changes in respect to how we approach an asset class like this, which is it can be a part of a portfolio. It certainly would not be something we'd say is bigger than a single-digit position in a portfolio, something like 5%. Generally speaking, rule of thumb, which is going to lead us into Taylor's discussion. Rabih, anything else you want to add on the Bitcoin side?
Yeah, just for your point, now that an ETF exists, it's very similar to what happened with us with gold. Before that, we just needed to buy actual gold bars and gold coins, and then aside from the futures market for gold, now you can buy ETFs that have actual gold in them. This is the same. What's happening is the same with Bitcoins. This is just going to allow more people to participate in the market. Now you don't have to pay $47,000 to get one Bitcoin. You can buy one ETF that would track the performance. On a general level, this is just going to make the cryptocurrency industry more efficient in reflecting the prices. But this will not change, the rigorous due diligence that you have to do on an asset class by itself, where you look at its parameters, where like how risky it is, what's the standard deviation, how much it fluctuates, and what's, as a distribution, what type of return does it give you? And based on that analysis, you decide whether you want it in your portfolio or not whether there has been advancement in the technology of the industry. It's just the asset class as itself, is it investable or not?
Yeah, that's great. Awesome, Rabih. That was an incredible summary. Seriously, I think that'll be super helpful for people. Taylor, let's jump to you. Question being, should you be listening to general rules of thumb when it comes to money? I know you've got some hot takes on this.
Yeah. So you can tell me if you've ever felt this way, Matt, but I feel like sometimes I love my job almost all of the time, but sometimes I feel like I would just want to beat my head against the wall. And what I
I've
mean by
never
that
felt like that.
is, you might have a client with a particular belief and you'll spend multiple meetings, right? Hours and hours with that client trying to help them get through it and do something that's more efficient or better for their financial life. And then you'll feel that like burst of success, like that breakthrough, you did it. And then another client will immediately email you saying, hey, I heard I should do this. And it's the complete opposite, where you just barely spent hours. And you're like,
Yep.
And everyone's on their own journey, but you personally, you just spent hours trying to like get through this roadblock with a client. And then another client emails you with the same thing. And you're like, oh my gosh, I just want to bang my head against the wall.
Yep.
So this came up, and I was thinking a lot about this week, because within the last week or two, there was this it was a simple post on X, and it just said, tell me why I
Is
shouldn't
that what we're
just...
going to call it? We're going to call it X still? That's fine. It's the
the artist formerly known as
known
Twitter.
as Twitter. Yeah.
Yes. In the post was, tell me why I shouldn't just buy the S&P 500, right? And this just blew up, right? And so I just wanted to, I'm going to just read through a list of just 4 general pieces of advice. And you tell me, Rabih and Matt, if any of these sound like bad advice. So
Okay.
buy the S&P 500.
You want one by one? You want me to
That's it.
No,
respond
so
one by
buy
one?
the S&P 500. Traditional health insurance offers the best coverage. Pay down your debts. Credit cards are bad. When you hear those, like, are you just like, yeah, that's bad? Like, generally, do you feel like that's good or bad advice?
I'd say generally speaking, like generally good advice overall. If you're just saying on a general, from a general stance, like
Would you
someone
take
be...
any of those and recommend any of those to your clients?
Depends, maybe. Depends on the situation. That's the ultimate answer for me, is the tired answer that people don't want to hear, which is it depends, because it's so personal to them.
Yeah. Well, and I love that you said tired, because, for example, I'll play basketball with the same group of guys, pick up, and they may be talking about they got a bonus at work, or they might have an extra $1,000 or $2 to put in the market. And they may say, I listened to this crazy person named Rabih talk about spot Bitcoin ETFs. So I think I'm going to put it in that, right? And my tired answer would be, just buy the S&P 500.
Yep.
Right? Because I don't necessarily want to explain why I think that is necessarily a good or a bad thing.
Yep.
Right?
Yeah.
So I guess my point with all of this is, I just firmly believe that good general advice is bad specific advice.
Yeah.
Right? And the whole point here is, buying the S&P 500, is that a good thing? Well, if you're looking for US large cap exposure in your portfolio, yeah, I'd say that's good advice. But if that's the only thing you're going to do because you heard this as a general rule of advice, I would say that's bad advice. I don't even need to know more. I just tell you it's bad advice.
Yeah. I would add the nuance here. I think what you're alluding to, and I totally agree, is there's just so much more nuance to these discussions. And sometimes we get tired, you do, of having to try to describe or explain the nuance. But I would say, from my standpoint, when someone says, should I just, like when you hear the general advice from, let's say, Warren Buffett, this got really popular when Warren Buffett said that the average person should just invest in the S&P 500 and never look at it for the next 30 years, or whatever the quote was, something like that. And my response to that is, like, that's general advice, right? I would say my response would be, compared to what? Like, what is the alternative to that being, your path. Like compared to day trading, that is great advice. Like absolutely buy the S&P 500 and sit there. Compared to trying to implement your own sector rotation strategy and follow like the economy when you are a dentist and don't know anything about this, yeah, the S&P 500 is a way better strategy. Putting all your money in Bitcoin and walking away, yeah, the S&P 500 is a way better. So I think it is compared to what on all of these things. But again, therein lies the nuance here of saying personal finance is more personal than finance. All of this stuff has to come down to, if you're really trying to do it right and optimize this and customize this to your life, it's a lot more extensive than just going on X and being like, oh, yeah, I should just do that.
Yeah.
Rabih's got thoughts.
I mean,
No,
Rabih, are you putting all your money just in the S&P 500?
no, I'm not. I don't know
No, it's
if
Bitcoin Spot ETF.
I don't know if it's allowed to flirt with our clients and listeners on the podcast, but this is general advice for general people, and we think they are special. They should get special advice, not general advice. And I really like Matt's take on it. So like, what's the opportunity cost and compared to what? And when it comes to a dentist with their own special circumstance where they already, and like this is my own hot take, like they already have a bunch of houses, they have their dental practice, and then they come to us and it's like, I want to invest in more real estate. Whereas if you really try to look at their portfolio, they're overexposed to real estate compared to the average investor in the US, simply because of the nature of their work. And we'd be like, why do you need real estate in that situation? The general advice, yeah, real estate is good, but is it for a dentist whose lifestyle already has a lot of real estate exposure in it? This is like where, if you want to elevate it a level further from general advice, and you like try to look at a general advice that only like dentist specific general advice, in a sense, this is an oxymoron, general and specific in one sentence, but like you can always narrow down to this certain group and you will find 1% better of an advice that you can provide. And to answer Taylor's question, yes, I like the S&P 500, but given that I work in a business where my revenue exposure is like my income is actually impacted by how the market moves up and down for our bonuses and etc. I don't only invest in the S&P 500. I want other, uncorrelated streams of revenues for me to give myself the specific advice that I need. And this is the same logic that we would apply to dentists.
And I love that you brought in like our clients and as dentists, and it just kind of comes back to the third one I said, pay down your debts, right? This also, I was reading this week another article that was talking about, there was someone who had $300,000 left on their mortgage at a 3% interest rate, and they chose to take this extra $300,000 that they'd made and pay down their house, right? And then you grab your popcorn and you jump in the comments of the Twitter comments and you read them, right? And people, the surprising thing is most comments were applauding this person, right? And saying, oh, you can't put a price on being debt free. And the honest truth of that is, well, you can, right?
Yeah, you can.
You can actually run the numbers and see
cost, yeah,
what that did cost that person. And this article I was reading was talking specifically about this and what the true cost of that specific decision was. And if you look at it based on the age of this person over the next, I think they were 45. So basically the next 20 years, it was going to cost them about $1.5 to $2 million conservatively in net worth impact.
And you're saying 20 years, I'd say 40 years, go lifespan, not retirement span. Yeah.
Well, and this was just talking like the rest of the mortgage, right?
Oh, got it. I see what you're saying.
The further out you go, right, the larger that impact is, right? And so, especially with our clients who don't just have a $300,000 mortgage, right? They've got $200,000 to $500,000 in student debt. They buy $1 million practice, $1 million practice real estate, $1 million starter home in today's market, and we're talking $3 to $5 million in debt. And so, if you're just going to follow the Dave Ramsey approach of just pay down your debts and don't think about anything else, you will cost yourself millions and millions of dollars in net worth, right? And you could still say, hey, this is good general advice, but my argument is good general advice is terrible specific advice, right?
Yeah.
And I think, I mean, Matt, you said this the other day when we were talking about this during our mastermind, but it's like, you having a health issue and only going to see a family doctor and never talking to a specialist, right? It's not that this family doctor isn't a good doctor and can't do a decent job, but if you've got a heart problem, you kind of want to talk to someone who specializes in the heart. If you've got some issue with your brain, you want to go talk to someone who specializes with the brain, because that's going to give you the best possible advice. And if the goal is, how do we maximize our net worth? How do we maximize our long-term future? Well, general rules of thumb just do not apply to you.
Yeah. And I understand you're so right, Taylor. And I understand the appeal. We live especially now, we live in the age and the era of life hacks, right? We're all looking for life hacks. We're all look no further than Twitter or X, whatever, social media. We're always looking for the easy way out. And again, I understand the appeal. I think one of the issues here, what you're speaking to, Taylor, is people's lack of ability to filter advice, meaning like understanding where you are on this general, like every subject you're trying to learn about or improve in your life, there's a scale, right? There's kind of like the going from basic to good and then good to great, or like good to optimal, right? And I think the problem is you get general advice as whoever you are, and that advice, like, here's what I'd say. Let's say you're super out of shape, right? You're super overweight. You don't ever work out. You're like base level 0. And then you see something on
right now. So
we're talking to
me.
Taylor. I'm not pointing fingers here,
right?
But let's say you're there, right? You haven't worked out for years. You're not, you're literally 0, right? You don't even think about.
Let's call this person Taylor.
Just random person named Taylor, and then you see on Twitter or X or whatever, Chris Hemsworth's supplement routine, and why would that matter to you? But people are going to see that and be like, I should go out and be looking at Chris Hemsworth supplement routine. No, Chris Hemsworth is on a scale of 0 to 1,000. He's at 999. You are at 0. There are so many more steps that you have to go through to get to that level. But again, I get the appeal. We're living in this world of life hacks and give me the easy way out. Give me the general advice. And Taylor, to your point, I think this all comes back to people's inability to filter for themselves how that should apply to them. And this is why, I mean, we're biased, but you should have someone on your team or someone you're working with or talking to that is objective, that is able to make that general advice much more personal and customized to you.
Yeah. Well, and this is why, I think we're all passionate about this, is because we're in this profession, but it's just, how many times have you talked to a prospect later in life, Matt, that just lived their life by general advice before coming to you? And then you've just like internally compared that to a client that you've worked with for years, that you've been giving specific advice, and you compare where they're at in their careers, right? And I can't tell you how many prospects and clients that I have now that came to me in their 50s and even 60s, and they have told me after learning and putting specific plans in place, I wish I had met you 15 years ago in my life.
I mean, I wish I had met you 15 years ago, Taylor.
And this is not unique to me. Rabih. This is just them feeling like, oh, this makes so much more sense. This is why I put a plan in place. This is why I go through this effort. This is why I go and make sure I'm getting specific, tailored advice to my unique situation, because it will literally improve my net worth and my lifestyle, 100-fold in many instances.
And let's take this even further, right? We're talking about the opportunity cost, the dollars and cents, the spreadsheet side. I think there's even something more important above that, which is all the qualitative aspects of this, of like living a good life. And that is so unique to every single person. The values, the concerns, the goals you have are so unique. And so the answer might be the spreadsheet answer, which kind of tends to favor the general advice in some form or fashion sometimes. And maybe that's not true, like to the debt discussion. But a lot of times it's like the spreadsheet answer. But it needs to be so much more personal to that, of what it means to you to live a fulfilling, or what we say, a rich life. How we close out the show every time is that rich life is only something you can define, which, Taylor, inherently to your point, is that's impossible to get generally on Twitter. You can't get that nuanced, personalized approach by following Dave Ramsey or any finfluencer on social media. It's not possible. You can't life hack your way out. You can't life hack your way to a fulfilling life. It's impossible.
Yeah.
Rabih, you're sitting here brooding, ruminating.
No, I love it. What you guys are saying is gold. Like if your personal goals in life are specific, what makes you think that general advice will let you reach those specific goals? It seems like there's a disconnection out there.
Yeah, totally. I think there absolutely is. And I think, again, coming back to just thinking about where are you on that scale within that subject? Where are you when it comes to building wealth and money? You're getting healthy, you're building a practice. That's going to dictate how your filtering process of how you take in advice. What should you be taking and what should you not? I'll be honest, you're a first year associate or even a first year practice owner. I wouldn't be talking to the dude who runs 15 practices. He's so far removed from you. He or she is so far removed from where you want to be that person's probably not going to be able to give you actual advice of step 1, 2, and 3, which is where you are, because they're so far removed from that. So we probably got more than you bargained for on this, Taylor. And I know you got to go. We got a call. So maybe we push my topic of childcare costs to the next show. We'll tease it as
back to the teasers,
as we love to do, unintentionally. But we do need to make sure, hey, we're being respectful of everyone's time. We try to keep these concise. And Taylor, you got to go change some lives on a phone call. So we want to make sure. Any other final thoughts you have? I love these two topics. I think we went into a lot of detail. I think both could be their own separate show. Honestly, these could just be teasers for a bigger show. But any other final thoughts you guys have?
I just can't wait for all the people who are going to message us about Bitcoins after the show, because
I know. Can't wait. Can't wait. We're going to get this posted. I guess I should have started with this. These are now, you're going to notice as this gets released next week on Monday, we will eventually be getting back to doing these live. I had it figured out, technical difficulties today. We will get it figured out. They will be live starting on Fridays every week and then being released on Mondays. So that'll be the new schedule. So, okay, guys, this was awesome. Thank you so much, Rabih and Taylor. Thank you everyone for listening. We will end this like we're going to end pretty much every piece of content we do from here on out to talk about the Dentist Money Summit coming up this summer, June 2024. I guess we're in 2024, June 20th through the 22nd in Park City, Utah. If you want to hear more about these topics, you want to meet us, you want to come and hear from incredible speakers. I just gave the thumbs up to my screen. I got to turn that setting off. Did you guys see that? The thumbs up?
Just the bubble.
Yeah, just the bubble. But anyway, Dentist Money Summit, check it out, dentistmoneysummit.com. Again, thank you so much for listening. That was our 2 cents. There's only one thing left to do, which is go forth and live your rich life. Till next time, bye-bye.